Hey there, everybody. Thomas Wood with Basecamp Trading. It is Tuesday, July 18th, and we're going to continue with the Mistakes Traders Make series. And today we're going to talk about a topic that comes up all the time when I'm working with people, and that is emotions in trading and managing those emotions and having those emotions, because they're going to be there, especially when you're trading with real money, and how you can manage them. So I've told you guys before that the most successful traders I know are highly disciplined. Okay. Now, one thing that comes with being disciplined is you have the ability to act based on knowledge as opposed to the emotions, meaning you know when you're supposed to do something and you do it because that's what you're supposed to be doing. You're being disciplined, but you're not just emotionally placing trades or jumping in and out of the market based on getting scared of the market moving, or being scared of giving back gains, or getting out too soon or getting out too late, or realizing a loss. Okay. So you got to keep in mind that emotions come into play throughout the entire trade process. They come into play when you're sitting there waiting to place a trade, because you'll see the market moving, and when it's moving, you're going to be going, oh goodness, I could be making money up. Oh, I could be making money down. It'll come into play when you're getting into the trade, because you don't want to get in too soon. You're scared to enter a trade, which is something that I hear a lot of, is traders are afraid to pull the trigger because they don't want to have a losing trade. Well, one thing I tell people is, look, you should never be entering trades with the expectation of losing. If you're entering a trade with an expectation of having a loss, then why in the world are you placing that trade in the first place? Every trade you place, you should have the expectation of making money. Now, that's not to say that you get into a trade, you get addicted to an idea where you go, I'm going to stick with this trade no matter what, and you keep adding to a losing trade, or trying the same trade over and over and over again and losing it, or giving it more and more room and having a big blow up trade. But that is to say that every trade you should take should be based on probabilities and be based on a plan that you're following, that you believe is going to give you the results you're looking for. So you should have the expectation of winning. All right. So once you get to the point where you have that expectation of winning, the fear of getting into the trade is not going to be there, because why would you be afraid of getting into a trade that you are expecting to win? Another part that emotions come into play is the fear of losing. And this causes big mistakes. Things like traders moving their stops and giving the market more and more room, or adding to a losing trade, or not realizing losses. And the on the other side of it, it also comes into play on exiting the trade even when you have a winner. Meaning you cut off your winners too soon because you trail your stop right behind it because you're afraid to give back the gains that you have, or you don't allow a trade to run far enough because you're afraid it's going to turn around against you, even though it's continuing to go your favor. So you just go ahead and close it because it ran your favor really quick, and you go, oh goodness, it's going to go back against me. So you close it right away with a 3 or 4 or 5 tick profit, and you could have made 30 or 40 or 50 ticks on it instead if you had stuck to your rules. So one of the biggest things you can do to fight the emotions, other than just becoming a very disciplined trader, is by having a set of rules. Having a set of rules, not just for why you get into trades, but why you get out of trades, how you manage the trade. You should have everything outlined. You should not be making decisions as the market's moving. Everything should be planned out ahead of time, so you know exactly what you're doing, when you're getting in, when you're getting out, why you're getting in, why you're getting out. And don't just go and type it up on a computer. Write it out by hand. They've done studies in the past where, and I don't remember the source, so don't shoot me, but I remember reading an article about how people have a higher probability of following something, or actually sticking to something, if they write it out by hand as opposed to just draw it or type it up on a computer. So go through and write your trading plan by hand. What do you plan on doing? When do you plan on getting out? When do you plan on getting in? How do you plan on managing that trade? How do you trail your stop? That kind of thing. The other thing is, and this is another really big one, especially with trading, because you shouldn't be trading with non-risk capital. I talk to traders a lot of times, and they say, well, this is my last shot. It's either do or die. I have to make this work, or else I'm done. And they're not trading with risk capital. What they're trading with, if you're doing that and you're saying that, then that means you're trading with money you can't afford to lose. And all that does is put a huge emotional strain on you, because now you're sitting there going, oh goodness, I have to be right. I have to be right 100% of the time, all the time. And nobody can do that. All right. So trade with money that is not as important to you. And I told some of the people I was working with in a mentorship the other day. I said, look, I personally, when I put money in an account and I fund an account, it's money, I write it off. It's gone. It's done. I'm never going to see that money again. Is the way I look at it. And now I go play the game. And the way I play the game is you follow your rules. You win the game by following your rules, period. That's all you got to do. And you have a plan. You have rules in place that you're following. Okay. Back to make sure you have rules. So trade with risk capital, money you can't afford to lose. If you cannot afford to lose that money, you probably shouldn't be trading with it. Okay, don't be going and maxing out credit cards trying to open up a trading account. Make sure you have a trading plan that you're following. The other thing, this is going to tie into becoming more disciplined, is get an accountability partner. It doesn't even have to be somebody that trades, but get somebody and tell them what you're going to be doing. Show them your trading plan, tell them what the strategies are, why you're going to be doing it, etc. So that a couple of weeks from then, or as you're continuing to trade, you can go back and you check in with them, and they need to be holding you accountable. Because with trading, you are sitting at your desk or at home by yourself without anybody there watching you. So it makes it much easier on you to go and just decide to do things without really thinking them through. But if you get that accountability, you get that accountability partner, it'll help you with sticking to a plan better and following your rules more. Okay, now we talk about a whole lot more regarding emotions and controlling emotions. We have about an hour-long segment about regarding emotions and how to control them in the acclimation course. If you sign up for a trial at Basecamp Trading, you can get that. That's there. It's free. We make it so that everybody can get it because it's important to get. So that's it for today. I hope you enjoyed it. Don't forget to like and subscribe if you're enjoying these videos. I'll see you in the next one. Until next time, happy trading.